Now, here is Ticky Fullerton on Your Money.
Hello, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Well, coming up, Shell Energy expanding its vision for Australia with eyes on the retail customer. Shell Australia CEO Yujnovich urges more agreement on energy policies and shares an update on Prelude and East Coast LNG. In a big day of results, CSL delivers on its results, but of course, the market always wants more from its biotech darling. Paul Perreault unpacks the results and what investors should expect ahead of them. And the single touch pay deadline looms for small businesses in Australia. Xero Australia Chief Trent Innes joins me live to update us on what that all means and how the transition to STP is going and how his business is also travelling. Well, extraordinary developments in Parliament in the last 24 hours, haven't there been, with this historic defeat by the government, losing a vote in the lower house on the Kerryn Phelps-inspired, Labor-backed Medevac bill. This gives doctors power to order medical transfer of asylum seekers and refugees. Scott Morrison has responded by announcing that Christmas Island will reopen, with the government warning of more boat arrivals, which would be on Labor's head. National security is the new agenda ahead of the election, and for more on this, I'm joined by Sky News political reporter Annalise Nielsen, live from Canberra. Annalise, fill us in with the latest. What happened today?
Well, the vote did pass the Senate. It was not entirely unexpected after it did make its way through the House. That was really tenterhooks vote yesterday. But there was some doubt because Senator Darren Hinch was saying that he wanted further security briefings. With the way the numbers fell, they needed 39 votes. They had 35 between Labor and the Greens, 2 Centre Alliance supporting the amendments, and independent Tim Storer. So, as he often likes to be called, Darren Hinch was the kingmaker in this case, and he was very happy to have the power in his hands. He got a security briefing today about what these amendments would be, and in particular what seems to have gotten him over the line was this ring fencing of the current refugees being the only ones who can take advantage of the medical evacuation amendments. And that was enough for him to say that he felt like it wouldn't be encouraging any people smugglers or encouraging anyone to try and take that risk, and so he doesn't think it would restart the boats. But that's certainly not what the Prime Minister said. He was very quick out in the Prime Minister's courtyard with a very fiery address saying if there's a single boat now, it is on Labor's head, and it seems like this is shaping up to be one of the big election issues.
Right. Now, what about the other matter, which was people were worried about that any old 2 doctors, including possibly a couple of politicians, could be there recommending ordering, refugees off Manus Island, and that, 1,000 people could be over by, I don't know, Friday or something.
That was exactly what the government was saying, and we heard a bit of indignation from the Greens because they were constantly used as the reference that you could have Dr. Richard Di Natale and Bob Brown be one signing you off. But they've both confirmed that they're no longer practising doctors. But that was the concern. The compromise that's been settled on there is it will be this independent board that's appointed of medical practitioners who have this job of reviewing the applications. But that caused its own grief for the government because what they didn't quite think through was the fact that these doctors are appointed and have a salary, and so you can't have any appropriation of money coming on any bill from the Senate. So that's caused a bit of a constitutional crisis for the government. We heard the opinion yesterday that that could have caused issues, but there was that agreement now that they will be appointed and not paid, and so it seems like they've sidestepped that particular issue. But it still does throw into doubt just the particular mechanics of it, and also the political manoeuvring of both parties. It seems like neither really thought too many steps further ahead on that one.
So Scott Morrison is now, he's reopening Christmas Island. I mean, it does, however this plays out, it puts this whole issue of border security back centrally into the election campaign, surely, and, at a time when presumably Labor would have quite liked things like climate change to dominate.
Absolutely. They very much wanted to keep the conversation around energy policy, the Banking Royal Commission. We've heard a lot of questions already in the first two sitting at the question times of the year. But what we are hearing from the government is they're very keen to reopen this discussion. We know that this is a real strong point for Scott Morrison. He was the immigration minister when he stopped the boats. He loves bringing it up. We know he's got that plaque in his office that's a boat and it says, "I stopped these." And so he's in a very comfortable space again. And you really do see that in the press conference yesterday, even though they did lose. It was a humiliating defeat to lose a substantive piece of legislation, the first time since 1941. The government's been trying to spin that, saying that there was another loss in 2013 for the then Labor government, but that wasn't on anything as substantive as this. This really is quite historical what's happened, but he's really happy that the conversation's around boats again, and he gets to reopen Christmas Island, even though he's not quite saying that outright.
And Annalise, what are the chances of another loss coming up? Isn't there a push to try and extend Parliament, the sitting of Parliament, beyond next week?
There has been that push, but we did have Andrew Wilkie today rule that out, saying that he thinks it's more about political point scoring than any substantive legislation. Bob Catter wasn't quite convinced either, and the crossbench numbers really are crucial there. It did take a significant amount of manoeuvring to get all of the crossbenchers on side, and we have heard from them previously that they're not here to take the government down. I've personally heard Dr. Karen Phelps and Cathy McGowan both say that in press conferences, where they've said that they're not here to cause chaos, but when it comes to things that really matter to them, they will use that power if they think it's the right thing to do. And so they came together yesterday. It doesn't seem like anyone wants to scuttle these last 10 days, and it doesn't seem like they want to extend them either. That's really a Labor push that's also being looked at a bit cynically, because realistically, you're not going to be able to pass every piece of legislation to enact every recommendation from the Banking Royal Commission in 9 days of Parliament or 15 days of Parliament. Obviously, it's going to take a lot longer than that, but they're really happy to have the conversation continue to be around the banks.
Absolutely, and you'd think a pretty good victory for Karen Phelps in her battle to keep Wentworth, with Dave Sharma back in there battling away.
Absolutely. It's certainly been a hot topic for her constituents, and she gets to go back and say, look, I was only in Parliament for a few weeks and look what I managed to do. So I think she's going to be very happy hitting the campaign trail.
We'll be watching Malcolm Turnbull's old electorate with great interest. Annalise, thank you very much for joining us.
Thank you.
Now, with all the light on the Hayne Royal Commission report and that Medevac bill, the energy sector has been a little undercooked in the media recently. Shell boss Zoe Yujnovich was on her feet at the Melbourne Mining Club today. A bit of a call to arms on leadership in the sector post-Hayne. Pressure on retail prices and from climate change activists continues, even entering the courtroom last week with this extraordinary judgment, this judge ruling the Rocky Hill coal mine could not proceed because it would somehow contribute to climate change, and he joined the causal dots and put our Paris Agreement at risk. So this from a judge who, however well-intentioned, seems to have just a bit of a conflict of interest as well. He reportedly co-founded the Environment Defenders Office, which then funded the group that took action against Rocky Hill. Well, let's hear from Zoe Yujnovich. I asked her about that, but many other things. We caught up with her just after the speech. Zoe Yujnovich, I'll come to your speech, but you've said that Shell bought big into LNG in part to drive competition, and you say you're now considering how you can supply the products and services Australian customers want. How are you going to do that?
Yeah, thanks, Ticky. Great to speak with you again. Broadly, from a Shell global strategy, we've indicated that we want to invest about $1 to $2 billion of our global capital investment into the new energy space. So that'll include things such as power, retail customers, energy and new energy developments such as solar, offshore wind, onshore wind, and indeed just recently we announced a kite development with Alphabet. As it pertains to the Australian industry, we're starting to see what we've learned from our global investments and see how we best apply that into the Australian context. In the first instance, I think you'll see us servicing our existing asset base. So we'll look at how we'll do a solar investment, for example, in Wandoan, just outside of the Darling Downs, to our QGC assets, and indeed in time see how we tailor that product into what we believe will be a more carbon neutral product into the Australian domestic marketplace.
You've brought on a new VP in Greg Joyner, just talking about your Wandoan solar project. What's it going to take for that to be green lit?
Yeah, so Greg Joyner has just recently been appointed as our head of Shell Energy in Australia, and his role will be to work with us through how we provide both power generation opportunities as well as new green developments. For us, I think when we look at a solar farm, we're really looking at how we make that the most economically attractive proposition. And in the first instance, I think really leading by example and how we will decarbonise and improve the resiliency of our own portfolio by connecting our assets to things such as the solar farm in Wandoan.
Yeah, but it's very much looking at it from a return on investment point of view, presumably.
Indeed, it'll absolutely be on the economic hurdles that we have internally. It'll also be around how we ensure that the resiliency of our portfolio in terms of our carbon exposure is managed. And I think that's why, in the first instance, we're looking to develop these green developments adjacent to our existing asset portfolio.
Zoe, you're talking about doing more for customers. Are you looking at perhaps buying an energy retailer, a gas or a gas or power retailer on the East Coast or in Australia?
As you know, Shell globally has been involved in acquisitions in the retail space, some of which are in wholesale distribution, some of which are in the retail space, for example, with First Utility in the UK. Our initial focus in Australia is to really look at how we provide energy solutions into that sort of the C&I space, the industrial consumer space, and potentially in time deepen into how we would face our customers in the power segment. I think in the first instance, though, it's really important that we recognise what we've learnt from abroad and then take the right investment choices within the country to make sure that our impact can be sustainable.
But you wouldn't rule it out buying a retailer here?
We've always got a funnel of fantastic opportunities, and I think importantly for us is just making sure that we place that capital in the highest return so we can be the world-class investment case that we're seeking.
Huge political pressure, of course, now with this, with the issue of climate change. You're seeing it with the independents. It's also gone into the courtroom in the last few days with this extraordinary result by a judge, the Rocky Hill mine result, where he takes into account the impact that the mine might have on climate change individually, and marks it down for that. What do you make of this decision, and what impact could it have on extracting gas in Australia?
Yeah, it's certainly a really interesting recent development. I think from our perspective, it's really about both standing back, but equally, I think, finding ways to lead into some of these decisions. On the standing back, I think it's really important that we recognise globally society is expecting that we find ways to decarbonise. And Shell globally has made a pledge to reduce our own emissions by 50% by 2050 in line with societal progress. And I think so from a macro perspective, it's to try and recognise that the societal pressures nowadays are very clear about seeking decarbonised pathways to produce greener energy to customers. As I look to it in terms of the kind of specific aspects, it's really about making sure we try and highlight the merits of the case and try and allow facts to speak for themselves. And of course, this is incredibly difficult to do, particularly as we start to see the influences around how society can influence both politics and indeed can influence, therefore, the decisions that get made, whether they be in the courtroom or indeed in political reforms.
Yeah, but disturbing, no, that it's gone into the courtroom?
Yeah, I mean, I think whenever there is a lot of tension and perspectives that are progressed, I think we do find that we do have these moments where we'll see these incongruences. So ideally, or difficult as it may be, I think it's to work our way patiently through this, working through the specific issues at hand.
Yeah. Zoe, what do you make of the Hayne report, and does it have ramifications for broader corporate Australia, companies such as yourself?
Yeah, absolutely. I think, look, the Hayne report certainly reminds us of the important role that we have to play, and that there has been a really big trust gap created both between business but equally around more broader community leadership. In Shell, we have a saying that we should always do the right thing, especially when no one is watching, and that's because practically we recognise that actually everybody is always watching. And so to try and judge our decisions today in how societal expectations will evolve in the decades to come, because of course in many instances it's the legacy that we leave that actually comes back into the future as societal progress continues.
You talk about the economic contribution that the sector makes. You talk about, obviously, from an export point of view, but also higher wages in the resources sector than elsewhere. And you say, I'm quoting you, I'm proud to say the resources and energies industry better than most when it comes to spreading prosperity to communities. What do you make of Energy Minister Angus Taylor's broadside attack on AGL this week for making, a significant profit in what he says is at the expense of customers? I mean, are companies just not allowed to make profits at the moment?
Yeah, I think one of the things that we have often talked about is recognising that there is a pent-up frustration right now amongst many in Australia around the lack of wage growth that we're seeing. And of course, people are seeing with high levels of personal debt, challenging prices on houses or for rentals, combined with that personal debt level, really leaving people with some difficult situations. And so whilst it may be oversimplistic to kind of think through how we might resolve this, it does strike me that one way of doing this will be to try and increase the capital that's flown into Australia. The more we can create jobs, the more likely we are to ensure that that wealth distribution that you spoke of can be distributed around the regional developments. And we looked at the Queensland coal seam gas development for an example. There has been $200 billion that has flown into Queensland as a result of the LNG industry. That's about 40,000 workers during construction, or indeed 13,000 workers. And we know that the resources sector, on average, has salaries that are around 2 times that of the national average. And so creating the economic conditions that allow us to progress increased capital development into Australia is undoubtedly a way through which we can try and garner that support for real wage increases.
Yeah, because I mean, you've been a staunch defender of the export industry. I mean, acknowledging that there was perhaps overinvestment, but had the investment not been there, presumably the industry wouldn't be there either.
Indeed, we often talk about, firstly, we do recognise the need for there to be a functioning domestic market in order for there to be a licence to operate for our export products. But we also recognise that there is indeed that tension that you just described of making sure that we balance the broader economic prosperity that is brought about by these investments in our regional hubs.
Yeah. If a Labor government does succeed coming to office in May, what are your concerns about policy down the East Coast from Labor?
Firstly, I think in the history of Shell in Australia, we've now been operating in Australia for 117 years. I think we've been able to demonstrate that we can work with both sides of government. I think importantly, as we look to the near future, we're really trying to find policies that stand through the test of time. Most of our assets in the resource sector span multiple elections and multiple governments. And so in order for there to be sustainable policies that don't end up being changed, we really need that bipartisan approach, particularly to energy and climate policy. So for us, what we would like to continue to advocate for is that bipartisan support in how we actually provide reforms in energy and climate change.
All right, I'm just going to finish with a couple of operational ones. Now, Prelude, of course. Zoe, we're all waiting for the timing of the first shipment. I know you've had some commentary around tech issues and safety issues this year. You actually say we're not rushing this process. Do you have an ETA?
Firstly, I think it's important just to correct something that you said. We don't have safety issues on Prelude. We recognise that there is the need for us to continue at a pace where we remain in control.
Right.
Indeed, in the process of commissioning, there have been a number of incidents that have been notified to NOPSEMA. That's par for course and something that we do to ensure transparency on any issues that play out within our operations. In terms of first cargo, of course, it's an exciting milestone. We've had many exciting milestones already on Prelude. We've brought in first gas in the third quarter of last year. We opened up the wells, so we've got the first flow of gas from the seabed up into the facility, and indeed the next key milestone, as you described, will be the first LNG cargo. We're continuing to work through the commissioning and things are progressing. We will do this at the right pace. Fortunately, we believe that the test of success on Prelude will not be in the next near milestone, as exciting as that will be, but will be in how Prelude stands reliably over the coming decades. And so really our focus is to make sure that Prelude is the world-class facility that we want it and believe it can be in the next few decades.
I want to ask you about import terminals. They're all the rage at the moment. I think in previous public appearances you might have been against the concept of an import terminal, but Shell might do rather well out of them. What's your position on them now?
Yeah, I mean, firstly, our position is that we would prefer to see supply developed in areas closest to the demand hubs. It's our view that indeed those molecules brought to surface closest to where the customers need them is likely to be the most efficient. Indeed, pleasing to see in the latest AEMO report that we don't see that there will be a shortage of gas supply over the next 5 or so years. That said, I think what we do see is there could be periods where indeed import terminals can provide that excess gas to the market at times that we may need it most, potentially around seasonal variations or peak supply. And so I think from a Shell perspective, our advocacy primarily is through how we will develop onshore and effective gas reserves, but equally to work with partners that may be interested in developing import terminals to make sure that we look at this holistically, particularly around any peaks and variations.
OK, and just on pipeline reform, speaking of everybody working together, what do you think of the Burrup hub vision, and what are the challenges for Browse?
So on pipeline reforms, I think we do see that there is a need to continue to drive efficiency in the entire chain that delivers gas to our customers, and that'll be a responsibility on behalf of the LNG providers, but equally through the transport system and the reticulation towards the consumer. So I think it is certainly something that we continue to see efficiencies gained throughout the entire value chain. I think at the end you just talked about Browse. Certainly we do see that Browse is now in a place where the venture is well aligned. We've got a specific work program ahead of us, and indeed we're looking forward to seeing Browse take a foundational position in the North West Shelf development. A few milestones to go ahead of us, but indeed great to see some strong momentum behind us.
Finally, the Eagles going to hang on to that premiership, do you think?
Of course.
All right, well, I wish I could wish you good luck, but I'm not going to on that front. But thank you very much for joining us.
Thanks, Ticky.
After the break, CSL shares slump off the back of its half-yearly results. We'll discuss those moves in detail with CSL CEO Paul Perreault next.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Well, to CSL, which now sees its full-year guidance at the upper end of the $1.88 to $1.95 billion range previously given, as it reports a first-half net profit lift of 6.8% to $1 billion, with sales revenue up 11% on the same period last year. Moving forward, the company says it expects to continue outpacing the market in plasma collections, with plans to open 30 to 35 collection centres this financial year, as we discussed last year. The company will return an interim dividend of 85 US cents a share. Well, despite all that, shares in the trading company did slump. But for more, I spoke with CSL CEO Paul Perreault from Melbourne a little earlier. Paul Perreault, thanks for joining us. We're looking at how finely priced CSL shares are these days. I mean, every result you seem to have to outdo yourself.
Well, yeah, it's been a great year for CSL again. I think the first half was very strong over the previous year's half. So the demand for these products, Ticky, is continuing around the globe, and especially our core products of the immunoglobulin franchise for patients around the world. So strong growth again from our core business.
You talk about your gross margins. You call them beautiful margins. What has driven these margins?
I'd say the continued focus on our strategy, Ticky. So it is the continued expansion of our core base of business along with our specialty portfolio, which are products that have a bit higher margin than the base business. And those are in specialty and rare diseases. So they continue to expand as you have more awareness, diagnosis, and investment by governments into the healthcare systems when they need a healthy workforce population. That, along with the efficiencies that we continue to drive in the business and staying ahead of the curve in terms of the growth in the marketplace by investing in capital and in raw material supply. So it's a complete strategy around what CSL has driven over the past really decades to continue to grow the business at the right and appropriate investment rates.
I'm interested in how you're shifting the product portfolio, finishing one with lower margins, and then Haegarda has come in, even though perhaps it's cannibalizing one of your other products. How do you assess all this?
So we take a look at the portfolio, Ticky, across the therapeutic areas. So we're focused in different therapeutic areas and try to maintain our expertise in those areas to gain insight into what's driving innovation. And so we assess our portfolio around the growth rates, the diagnosis rates, and also the innovation that we're able to impart through our R&D efforts. So investment in R&D for innovative products, because in today's environment, governments and payers are only looking to pay for things that are incrementally effective in terms of not only treatment, but in terms of cost savings in the healthcare system. And so what we try to do is show the benefit and the value of those medicines across the portfolio and really look for those opportunities to precisely go into more white space areas. So our expansion into transplantation, for instance, where there hasn't been much change in transplantation in about a decade or so. So looking for those areas of white space where we have expertise, where we can add value.
So important to your business model is plasma. I know you're opening plasma centres and that seems to be outpacing the market. How is it all going? Are there any headwinds perhaps in the US?
Well, cost in terms of collections are going up slightly because as we're adding new centers, they're less efficient than if they're fully developed centers. And so that's putting additional price pressures on. Certainly wages are going up in the U.S. There's been a number of reports, and one even this morning, about wages going up in the U.S., and that is, of course, affecting us as well because we have over 10,000 of our employees that collect plasma on a daily basis. And so it's a big workforce where we're competing for labor in those markets. So there are pressures upwards on cost in the business, but we try to balance that with the efficiencies that we gain out of the additional centers in terms of being able to manage the growth more effectively.
So moving to albumin, the focus on the call was very much around China. There's a new license you've got there, but there is some pressure due to, I think, there's temporary restrictions on import supply. Can you explain that a little more and what, if any, impact there might be on supply?
Sure. So I just want to make clear, Ticky, that the constriction on the import supply in China was our products, particularly in terms of that approval that we're waiting on for Alburex. So there wasn't an artificial constriction in the marketplace per se. It was our own internal constriction of not having yet the validated approval by the authorities for the sale of this particular brand of albumin in China. So we knew that this was coming. This was part of the plan in the second half to have the production approved, and we expect that to start to flow through in the second half and into next year. So when I talked about the constriction, I don't want to confuse that there was something odd in the market versus CSL. It was a CSL imposed constriction, knowing that we had to transition our product portfolio in China.
Paul, what is the China strategy overall? Presumably there are Chinese companies in this market. Where's the opportunity and how important for CSL will it be going forward?
So China's strategy for us, Ticky, is a long-term play. So we've been looking at China for quite some time. We've invested over the course of the past decade in terms of infrastructure in China, and then more recently in the last 2 years have purchased a small manufacturing facility and company in China. But we see it as a long-term play. This is going to take 8 to 10 years to fully play out. And the issue that the locals have are no different than the issues we have in the rest of the world, and that is plasma is very hard to collect. You have to collect it in China. It's very hard to manufacture because it's a very complex and detailed manufacturing process. We are world-class experts in this area, and we hope to be able to bring that expertise to China, along with our infrastructure in terms of testing and really driving PCR testing in China for the plasma to make sure that we continue to enhance the market there and even to enhance the industry in terms of the safety profile by the testing process we use in the plasma testing area. So a lot of opportunity there to expand our portfolio, to expand beyond Tier 1 cities into Tier 2 and Tier 3 cities, which, as you know, even the Tier 3 cities are quite large cities with millions of people. So there's a lot of opportunity, but it's a long-term play for us.
OK, let's move to flu and Seqirus. Great turnaround story, of course, from 3 years ago, that $200 million loss. You actually surprised on the upside this half.
Look, we had a very strong half, Ticky, this year compared to last year, and the bulk of the sales for our influenza franchise are in the first half of our fiscal year because it's the Northern Hemisphere flu season or influenza season. And so that's where the majority of our sales in the Seqirus business take place. But it's due to, the innovation that we've had in terms of our adjuvanted flu vaccine Fluad for the elderly, the over 65 population, where it enhances the immunogenicity response in these patients to protect against influenza, as well as Flucelvax, which is our cell-based therapy that we developed and manufactured out of Holly Springs after taking it on from Novartis through the acquisition. And actually getting the volumes out of that facility, getting our new processes approved by the FDA in that facility. And then we were very happy to see the real-world effectiveness data that came out of a company called Allscripts, where there's millions of data points around Flucelvax compared to the egg-based in the real world in terms of reduction in flu and flu-related illnesses with our particular formulation. So again, innovation is going to be the key driver for this, and we were very pleased with the performance in the first half.
Now, look, I love talking about the nature of the business with you, obviously so important to people's lives. But from an investor's point of view, the share price continues to be heady. People wonder whether it's worth thinking about it as a growth stock. You've got those US dollar dividends, of course. But can you talk to investors about the opportunity for a moment?
Well, thanks, Ticky. I certainly enjoy talking about the business myself, and certainly part of that is the investment community and those that are supporting CSL with our growth. From that perspective, I'd say look at the strategy at CSL. If you want to invest in companies and really look at where the opportunity are, follow the strategies that the companies have. Is it a long-term strategy? And I think CSL has certainly been a long-term play. I think there's plenty of room to grow with CSL when you look at the demand for these special products that we manufacture. Look at the scale that we've been able to amass in the industry, which is a key differentiator from smaller players that might struggle in this space. So I always tell people, the share price is not mine to control. It's really a matter of my control is the strategy. And if you believe in the strategy and you understand what we're trying to achieve long term, then there's probably an opportunity for you to invest in CSL. And I believe that. I believe that what we do for patients around the globe and talking about the business, it relates back to the revenue and the numbers. So if you do the right things, the numbers should follow.
And what about investment the other way? You've got the new Bio 21 research facility in Melbourne. Now, what about CSL's ongoing investment in Australia?
No, look, thank you. We opened the new facility at Bio 21 at the University of Melbourne back in December. What it really gave us is state-of-the-art laboratories where our scientists can be more efficient and more productive in terms of the collaborative nature of the way the labs are set up. We were a bit piecemealed in some of the facilities that we had in the older part of Bio 21 that with this new investment by the university and by CSL and the collaboration that we have with the scientists, it's really driving a lot of science and innovation, especially in the translational medicine piece within Australia. On top of that, we're still investing in manufacturing in Australia as well. So our Broadmeadows facility, our new base fractionation facility that we had, along with the Privigen facilities that we have, out of the top companies in Australia, I think we're the ones still investing in manufacturing onshore. And so I think for Australia in general and for our investors here, you can be assured that CSL is here to stay.
And that's notwithstanding the chaotic politics here, energy policy and everything else.
Well, that's pretty much everywhere, Ticky. So people ask me about the U.S. and I say, well, yeah, but there's issues in other jurisdictions as well in terms of politics. And what I try to do is focus on the patients at the end of the day, and because it doesn't matter what your political renderings are. In healthcare, there are patients that are in need no matter what governmental system is in charge. And so what we try to do is work with all the administrations, the governments around the globe to make sure that these patients have access to these life-saving, life-extending medicines.
Paul Perreault, always great to talk. Thank you very much.
Thanks, Ticky. Pleasure.
After the break, a raft of changes to Parliament this week for SMEs. We'll discuss what to expect with Xero Australia's Managing Director, Trent Innes.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, small business is still to find out whether and how the Royal Commission recommendations will affect the credit crunch and the tightening lending conditions. There was some better news today, though. The government introduced legislation to establish the $2 billion Australian Business Securitisation Fund, which Treasury says will see SMEs gain better access to more competitive finance. Also today, the government plans to extend and lift the instant asset write-off that was introduced to Parliament today, and we talked about before. Maybe the biggest change on the shop floor for SMEs, though, is the new legislation was actually passed yesterday, requiring all Aussie SMEs to send digital payroll reports in real time to the ATO every payday. Well, here to unpack it all, Xero Australia Managing Director Trent Innes joins me live from Melbourne. Trent, nice to see you there. Now, this is a very important sort of requirement for small businesses, given the statistics of how many of them are still not on digital at the moment.
Yeah, absolutely. We see it as a really groundbreaking event for the digitisation of business across Australia. As you mentioned, especially in small business, there's many of them that haven't actually made this journey yet. In fact, some of the statistics we've seen is that 1 in 5 are actually still using manual means of pen and paper to record their records. 1 in 5. I mean, that means that 20%, and all these people are going to, by, is it July 1, have transitioned over. How is that realistically going to happen? Yeah, so I think single touch payroll, or STP as it's quite widely known, has already been in place for large employers. So anyone with 20 employees or above has been in place since the 1st of July 2018. But what passed through Parliament yesterday was that they've actually mandated that reporting requirement to the ATO for payroll all the way down to all employers across Australia. So look, there is definitely a bit of work to do, but it's actually quite a simple process, and I don't think it's something that small business needs to be scared about. I think the first thing is if they need some help, there's a lot of information on the ATO website, or they should just go and talk to their trusted advisor, being their accountant or bookkeeper, who can help them through that process.
Yeah, what sort of difference will it make to them, and what sort of difference might it make to the economy once all this happens?
Yeah, that's a really, really good point, and it's we've been doing a bit of study on this, and we actually think it's going to unlock a lot of productivity. So, the information that we've got at hand at the moment is that we think small business could save anywhere around 2.7 hours a week, and when you add that up across the entire small business economy, it basically translates to well over 1 million hours of productivity right now that small businesses are wasting doing a lot of manual work. And I think we see this as a real opportunity to remove a whole lot of friction out of that process and really start to streamline their processes to the government.
What do you think more broadly of the other things that have gone through, and generally actually on Hayne? Do you think Hayne has been unhelpful to small business in terms of accessing finance? And is this latest thing passed by this $2 billion thing passed by the government today, is that going to make any difference?
Look, we're still making our way through the Hayne report at the moment and the Banking Commission, but ultimately at the end of the day, it's about how do we actually make it easier to unlock capital for small business. So I think it's about trying to find that balance between over-regulating and unlocking capital, because we want to make sure capital is flowing through to business. We consistently hear from small business that they're getting access to capital is not easy. When they want to grow or even just run their business, and that's something we're really passionate about with working with the banks and other financial lenders about trying to make that process easier and really unlocking capital for business.
And the instant asset write-off now going through, that presumably makes quite a difference to some of your members.
So I couldn't hear you. Sorry if they've been Ticky. That didn't come through. Oh
right. So one of the other things that's passed through the bill's been put is the instant asset write-off changes increasing. Now presumably that'll make quite a difference to some of your members.
Yeah, absolutely. I think anything that actually encourages small businesses to be able to invest back in their business is a good thing. And the instant asset write-off has been really, really popular. So I think increasing that will have a positive effect on the small business economy.
And what about Xero Australia at the moment? You say there's still room to grow here. How are you travelling? Because I think Reckon's bailed out of your space now, hasn't it?
Look, I think we're really excited about the opportunity ahead. If you look at what's happening across the economy, we've been big proponents of digitisation from day one. We see the benefits it brings to small business. With the changes to single touch payroll, that's just going to drive this opportunity even greater. And it's not just in Australia. We're seeing very similar things play out all around the world. So we've got Making Tax Digital in the UK. We've got payday reporting in New Zealand. I mean, this is a trend we're seeing right across the world. And, we're lucky enough to have customers in over 180 countries around the world now. So whilst Australia is super important, it's not just all about Australia.
How, from beyond this single touch pay, are there any other big changes you can see this year that small business are going to come up against?
Yeah, look, I think we're right at the beginning of a massive sort of what we call a digital domino effect at the moment. So we've been through cloud. We're now talking about things like single touch payroll. We've got e-invoicing coming down. We've got open banking. So there's a whole lot of things coming down the pipeline at the moment that really remove a whole lot of friction out of the world of small businesses and just make their lives a lot better so they can get back on doing the things they actually love. And believe it or not, that's actually not generally doing paperwork. They tend to go into business to do other things than do paperwork. So anything we can do to help them down that path is a good thing.
And you think open banking is going to be a smooth affair, or are we going to have a certain amount of chaos as we all get used to it?
Well, I think in any of these scenarios, there's always going to be some teething problems, isn't there? But if you look at the intent of what it's about, so you can actually choose to use your data as you see fit, then that completely makes sense to us. So we will definitely get there, and we're massive supporters of anything that allows the customer to have better access to their data.
Trent Innes, very nice to talk, and thanks for all that insight. Thanks.
Fantastic, great to talk to you as well.
Well, after the break, Martin Smith at Eastern Partners gives his outlook for banks post the Hayne Royal Commission.
Now, back to Ticky.
Welcome back. Well, Kenneth Hayne's final report on the Banking Royal Commission hit with a thud last week, as we know, bringing down NAB CEO Andrew Thorburn, Chair Ken Henry, following its scathing assessment of the pair. Business banking advisory and analyst firm Eastern Partners today released their 2019 banking outlook for the post-Royal Commission landscape. For more on the fallout, our chief business reporter Leo Shanahan caught up with Martin Smith, head of market analysis at Eastern Partners.
Martin Smith, thanks so much for joining us.
Good morning.
Now, I wanted to ask you firstly about the resignations from NAB. Andrew Thorburn and Ken Henry obviously stepping down. They're a business-focused bank. Do you think they did the right thing?
Yeah, absolutely. I mean, we interview businesses and corporate treasurers on their interactions with the bank, and some of this was forthcoming for some time. We had seen a significant amount of customer churn experienced by the bank over time, so customers had been beginning to switch away from the bank over time. How that's felt more broadly across the business is yet to be seen. But yeah, there was some negative customer satisfaction occurring there, linked with outages that the bank experienced there across a number of, business units in the bank. Some of this was, forecast in advance.
Did those problems relate at NAB to a trust deficit in culture, or did it relate to more practical problems?
Certainly, I mean, NAB isn't alone in starting to struggle to connect with some of their customers. If we look at areas of business banking where customers are looking to their bank for advice, they're simply not getting it in many instances, particularly SMEs and small businesses. So certainly NAB is not alone in some of the troubles it's facing, and we're very interested to see how, I guess, the new CEO appointment takes place, whether they recruit from within the bank or bring in external experience. That's something all of the banks are grappling with in the wake of the Royal Commission.
Do you think a new benchmark in corporate responsibility has been set after this, and indeed the Hayne Royal Commission generally?
Yeah, absolutely. I mean, small businesses have been crying out for attention in this area for a long time. If we look at the methods of interaction with the bank, 1 in 10 SMEs, according to our data, are simply not wanting to interact with their bank whatsoever. So we've seen a lifting level of antagonism. Small businesses are certainly looking for more support from their bank, and if they're not getting it, these businesses have kind of been reluctant to shop around in the past, but we're starting to see those customer switching intentions really lift. So the Big Four are certainly going to experience that as far as their revenue outlook is concerned. And with bank reporting this week, Bendigo, Adelaide, Macquarie forecasting a strong result for next month. How we see that kind of flow through to the balance sheet, customers want to see a lot more than simply mea culpas and sorries from their bank.
What of the recommendations in the Hayne Royal Commission do you think they're going to be difficult to implement, especially in relation to mortgage broking?
Yeah, it's arguably difficult to quantify at this early stage. You know, the government is looking to act upon all of those recommendations, but simple concepts there around what an SME actually looks like. One of Commissioner Hayne's findings there was how do we define an SME? So going right back to that simple case, if we're still starting from that point, small businesses may be a little bit aggrieved that some of their more pressing concerns may not be addressed. So this is certainly one step in what is a long road to redemption for a number of the banks, but it does remain to be seen just how effective some of those outcomes are. Looking at the ASB FEO with Kate Carnell looking to enforce some of these changes, Anna Bligh at the ABA, they're certainly active in their response to some of these findings, but I mean, it's back to basics for a lot of these banks, looking at real core customer needs there, straight back to transaction banking, cash management, doing the business of banking, as opposed to some of those other kind of areas of the business that they've moved into.
So do you see a move away from the Big Four in this environment?
So what we're seeing is customer switching intentions are starting to rise. So small businesses in particular looking beyond the Big Four, and in the middle market, we're at a time where Big Four concentration has never been higher. So we're tracking, say, transaction banking, aggregate Big Four market share of 80 to 85%, and it's never been higher. So businesses have been happy to bank with the Big Four, but they're starting to now look to other groups, international banks, HSBC there growing its customer base quite strongly, but really it does come down to how small businesses are going about satisfying their credit needs. So are they going to keep lending against property or be restricted in doing so? With falling house prices, particularly in Sydney and Melbourne, UBS expecting 20% falls across the board, that's going to have direct impact on balance sheets for small businesses, and they're going to be looking for alternatives from their lender. Now,
there's a lot of concern about a credit crunch, obviously in mortgage lending, but also in business lending. What are you hearing from businesses on that?
Yeah, well, we saw this week new ABS lending data released, combining retail and business banking lending data, and we saw a dip there from November to December around 2.5%. So certainly pressure there on margins. Whether you can link that directly with Royal Commission outcomes, with credit tightening in the wake of the Royal Commission, again, too early to be seen. But certainly conditions are becoming tighter there for that micro business and SME segment at a point in time when they've already found it difficult to access credit as it is. We look at that through the Scottish Pacific SME Growth Index. Accessibility to credit is a big issue, but one thing they're always looking for is lower taxes. And in a federal election year, the government would be well advised to listen to some of small businesses' concerns around that area. Less regulation, less red tape. Unfortunately, the banks are in a position where they need to factor that up further as a result of some of the compliance concerns that have plagued the banks there.
Well, who does stand to benefit then at the moment?
Well, arguably competitors there, so or non-Big Four competitors coming into the market. So with the open banking regime set to come through in 6 months' time, that's certainly going to open the playing field. And that was a big takeout from the Royal Commission, improving competition, increasing the level of competitiveness of banks outside of the Big Four. And so whether we see that kind of level of concentration decline is something that we'll be tracking closely as part of our research over the second half of 2019. But a lot of these changes are simply not going to be done quickly or within the first half of this year. It needs to be structural reform across the board. That's what businesses are looking for from the government, but also from their bank at a demand side level anyway.
Martin Smith, thanks so much for joining us.
Fantastic. Thanks, Leo.
And that's all for the show tonight. Tomorrow I'll be speaking with Her Majesty's Trade Commissioner for Australia and New Zealand, Natalie Black, and Suncorp's Michael Cameron on his results. Until then, thanks for your company.